Today, I want to look at two highly interesting companies from China with you guys, specifically Alibaba and Tencent. And I want to figure out which one of the two companies is a better buy at the moment. So welcome back to the channel. My name is Chris. As usual, I'm super happy to see you guys here. So with no further ado, let's jump right into it. Now we're going to evaluate those two businesses on four main factors. Number one is the business model and the durability of the business model. Number two is the moat. So do they operate in a very wide moat or with a very narrow moat? Number three is going to be the diversification away from the Chinese market. So how much of the revenue is coming from the domestic market versus the international market? And number four, the last point, is going to be their financials. So how is their income statement, how is their balance sheet, and how is their cash flow statements? With all of that said, let's jump right into the first point, their business model. We'll start out with Tencent for this point. So Tencent has a very highly focused portfolio on games. They really focus most of the business on games. They do still get some revenue from ads, from digital, content creation, and a little bit from their financial business that they're operating. But main focus is games. That is good for Tencent because games are expected to grow over 7-8% over the long term in the next few years. That is obviously fantastic growth, and I believe that Tencent will continue to benefit from that global push into gaming and esports. But Tencent also has some negative points, and that's mainly due to the area where they operate in, China. So the Chinese government is really strongly pushing against the gaming industry in China. They made some regulations so minors can't play that long anymore, and they put some really strong rhetoric out there calling gaming spiritual opium and things like this. So considering the history China has with opium, those are really strong words, right? So there is some kind of a pushback. Tencent says it doesn't affect them that much. I made a video previously on exactly that topic. Check it out if you'd like to. Where Tencent says that all of that trouble only made them lose 0.9% of their domestic gaming revenue. So it hasn't really affected them much. But we also don't know how far the government is willing to, continue with this. So I'm going to give Tencent 7 out of 10 points. Fantastic business model, great company, but they do face some challenges in the future. Jumping over to Alibaba. Alibaba obviously is a completely different company than Tencent. They're really focusing on the e-commerce sector internationally and domestically, as well as the cloud. That is definitely also good for Alibaba because the e-commerce, sector in China is still expected to grow by roughly 9 to 10% over the long term. So a little bit more, in fact, than the gaming industry. That is definitely good, but also here Alibaba faces similar problems like Tencent. There is generally a pushback from the government on those huge companies, and they're trying to break up those big monopolies. But I do believe that Tencent is a little bit more resilient in the business because whatever happens, people will buy things online, things from Alibaba, because people need things, right? If we look into gaming is something that the government can much more easily just cut out of people's life. They can just, if they wanted to, put a complete ban on gaming and it wouldn't affect people that much. But if you break your total e-commerce sector, that's just not possible for China, right? So I give one more point to Alibaba than I gave to Tencent, so 8 points here, because I think they are more resilient in general than Tencent. Jumping over into our second point, and this time I'll start with Alibaba. Alibaba has a moat, no doubt. It's a fantastic company. It's not easy to get into, that e-commerce sector strongly like Alibaba. But Alibaba has, over the last 15 years that it's operating, gathered a lot of competition around itself. If we look at Pinduoduo, is extremely fast growing, a strong competitor to Alibaba, even though they're still much smaller, but they are growing much faster than Alibaba at the moment, as well as JD.com, so Jingdong. They are also a really good company. They're providing in some areas a much better service than Alibaba is providing. And also here, JD.com is in fact growing much, much faster at the moment than Alibaba. Nevertheless, Alibaba is still the number one e-commerce company in the world and in China, right? No doubt about it. But there is a lot of competition trying slowly to take some market share from Alibaba. And they are in fact doing that fairly successful. And that can pose problems to Alibaba down the future. So from my point here, for Alibaba, only 6 points for moat. Jumping over into Tencent, Tencent is an absolute behemoth in the gaming industry. It's the biggest gaming company in the world, and I do believe they have a huge moat. It's not easy to get into the gaming industry, with all its ecosystem around it, as strong as Tencent is at the moment. Tencent especially has gotten a huge moat because they've done a lot of investments in other gaming companies, and that really made them extremely powerful in that industry. So we see as example here on the graph all the companies that Tencent has investments in the gaming industry, and it's breathtaking, right? So for Tencent, I give a strong 8 points out of 10. Jumping over into diversification, and again, I'll start with Alibaba here. We see that roughly 8% of Alibaba's revenue is coming from their international commerce. So they're really very focused on the Chinese market. 8% is really small of international revenue. So if something happens in the China commerce sector, if we fall into recession in China or whatever, Alibaba will suffer a lot because most of the revenue is coming from that sector. And generally, I don't like to see that. I prefer a much higher diversification than that. If we look at, as example, the S&P 500, so most of the American companies on there are in fact much greater diversified than Alibaba. And we see in fact the exact same problem with Tencent as well. They have roughly 9% of their Q3 2022 revenue coming from international games. And here also, same like Alibaba, if something happens in the domestic market, Tencent will suffer a lot together with Alibaba. But I do believe that if something happens, Tencent will have an easier time to diversify, because diversifying a game abroad is a much easier process than diversifying, supply chains or, logistics centers and so on abroad. So I'm going to give one more point here to Tencent versus Alibaba. So 7 points to Tencent, 6 points to Alibaba. And for our fourth and last point, we'll be looking into the financials. And specifically, we'll be looking into the long-term growth rates of the companies. We'll be looking into the profitabilities and margins of the companies. We'll be looking into cash and debt positions that they have, and into share repurchases. The long-term growth trend of Tencent is definitely intact. And we see that, yes, we had that little bump, from Q4 of 2021 and Q1 of 2022. But slowly we see that our growth is accelerating again. And there is no underlying problem of the company at the moment. They are also still extremely profitable. So we see that on revenue of 140 billion renminbi, they actually made a gross profit of 62 billion renminbi, which is a gross margin of 44%. And the gross margins of Tencent are fairly high. They have good gross margins, and especially they have more or less stable gross margins. And I do enjoy that. And on a net profit basis, they are making 38 billion renminbi, and that's roughly around $6 billion US dollars, somewhere in that category. Looking into their cash position, we can see that they have roughly 44 billion US dollars in total cash, which is made up of short-term investments, cash and cash equivalents, and some restricted cash. But 44 billion is an extreme, overkill in cash on your balance sheet. But they do have a net debt of roughly 4 billion. So 44 billion in cash, 48 billion in debt. So same as the cash, the debt is also overkill. Huge debt position, but it's fine. They can pay it off. There is just that risk of debt, which I don't really like that much. Additionally to that, Tencent also has a huge investment portfolio of 123 billion US dollars. And that makes up, companies such as Activision Blizzard, even Tesla is in there, Snapchat, and so on. So Jingdong, by the way, is also part of it, Pinduoduo. So a lot of actual competitors to Alibaba are backed by Tencent. So extremely crazy investment portfolio. Stocks from abroad, from America, as well as from China are all represented in that portfolio. So really, really strong here. And in the last 12 months, they actually made free cash flow of roughly 15 billion US dollars. So strong balance sheet, extremely strong. They are profitable, very, very good. They make free cash flow. So all three marks are checked here. Really, really good company. The only thing that I don't like is the debt. Now jumping over to Alibaba, we see a similar picture. Alibaba made total revenue in 2022 in the third quarter of 207 billion US dollars. So really strong revenue, and that leads them with income from operation of 25 billion. The problem is though that those 25,000 in income from operation is completely being abolished by interest and investment income of negative 42 billion renminbi. So the investments that Alibaba did have turned out worse than they expected, and they had to write down 42 billion of those investments. And because of that, their net income is really, really bad at negative 22 billion. But it doesn't change anything for Alibaba because first of all, it's a non-cash charge. And second of all, Alibaba still holds those investments. They're just worth a little bit less now, right? So after adjustment, we can see that non-GAAP net income is now 33 billion renminbi. So the same as Tencent, they are very, very profitable. But looking into their free cash flow, we see that in fact, they were making 35 billion renminbi in free cash flow. So extremely, extremely strong. And what are they doing with all that cash? Well, they're repurchasing shares of 13.8 billion. And that compares to Tencent's 11 billion that they repurchased in shares. So Alibaba, in fact, is valued much, much lower than Tencent at the moment, but they're buying back 2-3 billion renminbi more in shares. And additionally to that, Alibaba's balance sheet also looks much better. They in fact have a cash balance of 73 billion US dollars. And that compares to the 44 that Tencent had. But what's much better than that is that Alibaba in fact has almost no debt. They only have roughly around 20 billion in debt. So they have a net cash position of 50 billion US dollars that they just literally don't know what to do with it, right? And Alibaba at the moment is valued at roughly around 200 billion US dollars and 50 billion is in cash. So absolute killer financials. It's unbelievable. So I'm going to give 10 out of 10 points for Alibaba for their financials. This is absolutely fantastic. And I'm going to give one less point to Tencent. So 9 points for their financials. Summarizing all we've just learned together, the business model, our first point, Alibaba got 8 points and Tencent got 7 points. For Moat, Tencent did much better. They in fact got 8 points, whereas Alibaba only got 6 points. And for diversification, Tencent again did slightly better. They got 7 points here versus the 6 points for Alibaba. But in the financials, Alibaba did much better. They got 10 points, whereas Tencent only got 9 points. So in general, Tencent did better by 1 point in the overall rating than Alibaba. Alibaba got 30 points. But I have to say, both companies are fantastic. I personally own both companies in my portfolio, so I enjoy both of them. For you, I would suggest if you like each of the companies, do your own research, look a little bit deeper into them. They both are good, they both have their risks, but do your own due diligence. I hope you enjoyed it. I hope to see you soon again. If you enjoyed the video, don't forget to subscribe and smash that like button. Thank you very much.